Yeah, I'll show you how to get it, but you have to be willing to do the work. The Syndicate, it's a motherfucking movement.
It's a syndicate.
You ain't gotta be perfect, long as you down to put the work in. If when it comes to the bullshit you allergic, well, you just might be my kind of person. Welcome to the Syndicate, where real estate wholesaling is what the business is. Ain't gotta talk about it when you out here living it. So if you out here getting it, then welcome to the Syndicate. Well, welcome to the Syndicate. Well, welcome to the Syndicate.
All right, guys, so you're listening to another episode of the Real Estate Wholesaling Syndicate podcast. Very excited today to have my good friend Jeremy Adrian with us today. Jeremy, thank you so much for joining us, man.
Yeah, looking forward to it. Thank you.
For sure, man. I've been talking about doing this for a while and finally going to sit down and do it. So I'm excited, man. Do you want to give the audience a quick introduction on who you are, who Crown Capital is, and what you specialize in?
Yeah, so I'm one of the co-founders of a company called Crown Capital Resources. We are a hard money lender exclusively out of the state of Texas. So we've been in business since 2016. So we've been doing it for about 8 years now. But yeah, we service almost all the primary Texas markets. We work with a wide range of different clients. And yeah, we're really quickly growing as a preferred local hard money lender and got a lot of unique things that we offer.
I love that. Yeah, I know. I think there's I want to say misinformation, but it's lack of knowledge, I guess, for wholesalers when it comes to hard money, when it comes to private money. And I think it's not as hard as a lot of people think it is to actually start buying properties. And most wholesalers, they get into wholesaling because they want to be investors. They want to build that long-term wealth, and they want to get that residual income and, for their families and for their futures. And I think, having the right hard money lenders, right private money lenders in your corner is a game changer. And it's a lot easier than most people think. What do you think? Would you say that's accurate, you think?
Yeah, absolutely. Yeah. I mean, it's, one of the big misconceptions I feel like we hear a lot of is that, we only work with people that aren't qualified buyers. And the reality is we work with a wide range of people, right? We work with new investors all the way up to people that have been doing it and they've done, 40, 50 flips. Mm-hmm. We work with a wide range. And the reality is, hard money's exists because of the speed, right? So, the wholesalers, folks like yourself, y'all are out there finding these deals. You need to close them quickly. And just the process is in place with more of your conventional financing today. It just doesn't support that time frame, right? So we're able to do it a lot quicker. We're able to do it way more efficiently and, close deals in 2 days, 1 day, 3 days. I mean, we've done it all. It really just depends on the need of the client. But we work with a wide range of different folks.
Yeah, it's huge. Especially when wholesaling, most of the times, the reason we're able to get a deal is because we can close quickly and we're able to, solve problems that they have that agents can't or a lot of traditional buyers can't. But that's great. So just starting from the beginning for people that are brand new, we have a lot of new wholesalers that listen. What is, just in simple explanation, what is hard money?
Yeah, so hard money is really, I'd say simply put, it's financing for shorter term fix and flips or folks that are going the route of purchasing, turning them into rentals, mm-hmm. right? So, the process is, on paper and in the eyes of the county is really similar to a conventional mortgage, right? So in the state of Texas, things are done with a deed of trust. So, same process, documents are put in place where someone's going out purchasing a home and they're taking a loan out. Same process. Just the difference is you're working in a lot of cases with a smaller company and things are done on a shorter term basis than what you would, do for a conventional mortgage that, is put in place for a 15 or 30-year type mortgage.
Mm-hmm. No, that's a good explanation for sure. So, before we get more into it, let's start with, kind of who you are, what your background is, how you got started in real estate. So who is Jeremy Adrian?
Yeah, absolutely. Well, I have kind of a unique path, I guess you could say, on how we got into this. So, kind of dated back. So by degree, by education, I actually got a degree in petroleum engineering. So I graduated from Texas A&M University. I had a huge passion for the oil and gas industry, fully pursued that, graduated, got to work for really the same company for almost 14 years. And I got to do a lot of really fun stuff, everything from drilling, completing to producing wells, working at a $60+ billion market cap type company. And my business partner, he and I met in college and early on in our oil and gas profession. And individually, we both kind of got going into the real estate world just as a means of secondary income, right? So David got into long-term rentals. He had bought several rental properties up in the Dallas-Fort Worth area. At the same time, I had purchased a short-term rental down in Corpus Christi that was kind of near the beach as a rental. And really for us, it was just, we had already a lot of stock. We were invested in the market through retirement funds, with a lot of savings and things that we had at that time. And so we wanted to find other ways to diversify our portfolio. And real estate just really stuck, right? We saw the vision, we saw the long-term growth of it. Homes always increasing in value in the long run. And so we both individually jumped into that. And it really organically kind of came up one day when he and I got to talking and realized we had a similar passion for it. Mm-hmm. And at that time, we said, hey, let's throw some money together and let's go and fix and flip a house. Yeah. And so at that time, we were living in San Antonio. And so that's what we did. We started an LLC and we met up with some local wholesalers that we connected with, and we would leave at our lunch break and go and look at properties. And at that time, 2016, if you remember, things were pretty booming at that time. And so, for every, 1 out of 10 houses that we actually saw the vision for, a dozen other people did, and we kind of missed out on the opportunity. But through that, we met some different people who have been doing that for a while. And they said, well, why don't you lend me your money? I have the expertise. And that kind of got us talking about it. And we said, well, tell me more. And we started looking into it and we realized that's the perfect fit for us, right? So we didn't have the time to manage contractors from, morning to night every day. Right. But we did have the expertise and the ability to look at comps, look at evaluations, look at areas. And so we did. So we kind of organically started from that point. Put a bunch of, legal documents together, probably did things the wrong way at first, obviously got smarter over time. But that's kind of how we got started. So fast forward from then to today, we've done over 150 loans. I think we're coming up on almost 40 million in loans that we've originated from the beginning till now. So nice. We've got processes down now. We have a lot of really good tools and things we put in place. So I probably should say from that point, we did this kind of as a secondary job for a while. Mm-hmm. And then over this last year, we really saw the vision and decided to make this a full-time career path for us. So nice. We're both full-time Crown Capital now, and we've got a team of 4 and got a lot of big plans ahead.
Nice. I love that. Yeah, I think that you definitely did the smart way. I think so many people talk about it, like, just jump in, burn the boat. And I'm one of those people, I think it's really how you operate, but I think it's so much smarter and strategic to, keep what you have, make sure you're, not burning everything until you have a life raft. At least build a life raft first before you burn the boat. And I think that's a great play because it gives you more time, less stress. And now you're coming in and just ready to dominate.
Yeah, absolutely. And there's a lot of people out there that probably have a similar desire, mm-hmm. right? Dave and I both have an entrepreneurial side of us, mm-hmm. and we knew that for a long time. We used to always feel like we were going to go and start our own oil and gas company. And really kind of just fell into this. But, I think the pivotal point for us when we really realized this is the route we want to go is we lost that passion and desire to keep climbing the corporate ladder, right? And so once you really lose your motivation where you're at, it's hard to continue on and be as productive and be the contributing team member that you really want to be. And so that was a big thing for us. We saw the writing on the wall. We started, having families, having young kids. and realized that the most important thing for us is time. There's a book that both of us have read and we tell people about all the time. It's called The Psychology of Money. Really good read for those that, like to read, but it really challenges you and gives you a different mindset on ultimately what is wealth, right?
Yeah.
And to us, wealth isn't necessarily having millions and millions of dollars. Wealth is being able to do things at your own time and at your own leisure when you want to do it.
Right.
And that really hit home the way that the author of that book posed that. And so for us, this was an opportunity that both was exciting. It's something we enjoy doing, but it also affords us the opportunity to be there with our families and do things with them, while they're young and growing. So really excited to kind of jump into this next adventure.
That's awesome. Yeah, I'll have to pick that book up. So I'm an avid reader and I was looking for more stuff. So Psychology of Money. So
yeah, it's a good one. It's a good one.
Oh, awesome, man. So what has it been like for you making the transition? Because I know most people listening to you, I think they're still at that W-2 and they want to make the jump or they don't. And like, again, there's nothing bad to have W-2 if you like it, but some people like you said, they just need to make that jump at some point. What has it been like? Like how did you know it was time and what made you make the jump?
Yeah. I mean, obviously, from the financial standpoint, being able to at least pay the bills, and live the life that you've been living, that's important. It's really hard to, jump from something that's stable to, the very beginning of a startup, right? And don't get me wrong, there's people that have done that and had a lot of success from it. It's just that wasn't the route that was comfortable for us. So really just, finding the financial freedom, you at least get to a point where you can support those bills. And we were there. But really it was more of a mental shift for us, right? It was that point of where you just feel like you lost the motivation where you're at. And, for me personally, I don't like operating in that space. I'm either kind of an all-in person or I'm moving on and I'm doing something different.
Same.
And so I felt like I started living in that kind of in-between space for too long. And so, that coupled with the, growing the business to a certain point where we could do so financially, that was ultimately the turning point for me.
I love that, man. I appreciate you sharing. So let's get back and switch gears and talk more about, hard money and how that works. So I know for me, like when I first started, like I ended up doing the flips. I had a deal. It was too good of a deal I could wholesale it. I could make 20 grand maybe, but if I could flip it, I'd make more. And I think the first one we actually just wholesaled because we just used hard money, got the deal and just literally sold it right away. We ended up selling it with the open door. And it was when they were buying properties and they were paying like crazy. And we wouldn't be able to do that without hard money. And the process was a lot easier than I thought it was. It didn't really need as much. And I think a lot of people don't know they couldn't get it without needing it. Because I think there's a huge, I know at least for me, there was a huge misconception when I started, like, oh, you need to have millions of dollars in the bank. You need to have all this stuff to be able to get approved. And what I did is I partnered with someone who had more experience, he did more fix and flips, so we got more favorable terms. Can you kind of walk us through what it's like if someone's listening to this, they have a sweetheart deal, they know they can make more money if they use hard money and took it down themselves, maybe just wholesaled it or it was a light fix and flip or something like that. What's the process like if they're like, hey, I want to try to do this myself and use hard money? Yeah.
So, in the end, you can make a lot of money and not have a lot. And that's what it boils down to, right? We have the conversation with people all the time that, let's say they got $100,000, right? And there's a house that they could go and outright buy, or they can go and use hard money and buy two of them at once. And in the end, you're looking at that financial year and saying, well, how much money did I make? Well, yeah, you saved on paying interest by buying that property outright. But if you went and did two of them and you paid a little bit of interest and some of the fees and that associated with it, in the end, you're going to make more money.
Right.
And so that model exists today. And I think that's why people use hard money all the time, even when they do start building wealth. So there's folks out there that, have the desire to go out and take on one of these projects. Companies like us are out there and we're prepared and ready to work with people all the time. As far as what's needed, typically, we look at quite a few things, but it's not, it's something that you can put together really quickly. So we look at financials. Credit matters. It's not as important to us, but we do like to get a feel for what people's credit score is, just because in a lot of cases, depending on what their exit strategy is, if you're trying to refinance it, turn it into a rental, but you have a 500 credit score, we'd much rather have that conversation on the front side that, hey, you're going to have a hard time getting some long-term financing.
Right.
But in the end, for us, we're looking at the asset itself, the evaluation of the property, and less concerned about the true credit of the borrower. The other things we kind of look at are the actual asset itself, right? So I would put this in an asset-based lending category. So in the end, the collateral in the eyes of the lender is the house itself.
Right.
So we want to focus on what's the house worth today, how much money are you putting into it, and then ultimately what's it going to be worth after. And so, the ARV is important, and we're also looking at it as, hey, this isn't the highest price that you could possibly sell that house for, right? It's something that, hey, you're going to try to move this in 30, 45 days once the house is completed. So what do you need to list it at to be able to sell it for that?
Right.
And so we're kind of looking at all that together and deciding, hey, is this a qualified deal? Is this a qualified borrower?
That makes a lot of sense. So yeah, I think that's really it. That's why I love wholesaling. When you find the first part is find the deal. So if you have a really good deal, a lot more doors open up for you. So I know obviously as being hard money, you have to underwrite, look at a lot of different deals. What are some of the biggest mistakes people make, or when they underwrite the deals themselves, when they're trying to run comps and ARVs and their numbers are way out of whack? How do you look at a deal? How can people get better at looking at deals and come up with that 30, 45-day number as opposed to always going for that pie in the sky number?
Yeah, really, I think the key is you get excited about a deal, you get excited about an area, and I think it's really easy to convince yourself that, there's this much margin here, right? And once you mentally make up your mind to that, it's hard to go away from it. Right.
You look for reasons to justify.
Yeah. So, and you also have to recognize the time frame, right? I mean, a few years ago, my goodness, that house will appreciate in 3 months, probably another 5%. So it's the true evaluation is less important. It was hard to fail. But if you're looking at something today, you are in a market environment we're seeing some corrections in certain areas. And so you have to look at that. You have to look at not only what if the house is sold for, but how long did it take to do it, right? What are the days on market? You got to look at more than just one variable on what was the house sold for. Right. Another thing I think people don't give enough credit to is location. Right. Are you on a busy street? Right. Is there commercial space across the street? Or is it tucked in a kind of a nice, quaint, neat neighborhood, right, where it's more desirable by more people? If you want something to sell in 30, 45 days, you need multiple people to walk in there and see the vision and really want that house. Right. And so I think you got to factor all that in. Little things like, we'll just convert the garage into another room, increase the square footage, and bam, the house is worth that much more. Well, you need to understand that area. Maybe that area commands people wanting a 2-car garage. Right. There's a lot of guys out there that don't want to buy a house that doesn't have a garage in it. All of a sudden, you thought you were doing well by adding all this extra square footage, but in the end, you lost a lot of your buyers, and now you're having to drop the price because you're ready to get out from under your loan. Right.
For sure. I know when we were house shopping, I was like, oh my God, I could fit so much gym equipment in here and some mats and do whatever in the garage. And so we were looking at everything else. I was looking at the garages. So I think that's huge, just understanding what people are buying over there, what the market is. And yeah, I feel like, especially San Antonio is a great example of you can go over a couple blocks and it's completely different. They're, you can see a comp that's over there and just not knowing the area or talking to people who do. You could really mess up.
Yeah, that's a common one too, is your radius of comps is too big. Right. A lot of people don't necessarily drive the neighborhoods and they don't go and actually see it. At a minimum, use tools. You have resources through Google Maps, right? You can virtually walk a lot of these streets and go and look at that street, look at the neighboring streets. Where's the park? Where are the schools nearby? You got to take into account all those factors, because just as something's within a half-mile radius, it can be a completely different market. San Antonio is a great example of it, right? Alamo Heights area. A highly desired school district. If you look at a house that's 1 block off from that school district, that could be $100,000 difference in what that house is worth.
Yeah.
And if you don't know that and you don't know to look that up, you could really lose money on a deal.
I did that. Yeah. I lost money on a flip. Not knowing. Yeah. Learned the hard way. And it was, just wrong school district. Guess we're just right down a couple houses down the street.
Yeah. But that, that's something that we focus on as a lender too. Mm-hmm. One thing that we really have done really since the beginning is we focus less on appraisers and true BPOs, mm-hmm. right? So we actually don't even get formal appraisals. Mm-hmm. We do all that work in-house. And the reason being is we feel like with our money at risk, we're going to look at that with a more conservative lens than a random appraiser that, is paid $500 to go out there and look at something.
Right.
We've seen it too many times that you have 3 appraisals done on a property and you have 3 different evaluations. Mm-hmm. And so, we take that in-house, we look at it. And another part of that is, the person you're communicating with in our company, we're the ones that are going to go back and forth with you on what's that house worth. And in the end, we want to make sure we're both in agreement that the house is worth this. So that way, when we get to it and it doesn't end up selling, well, at least we had multiple people that felt like, this was a conservative and a good evaluation of the property.
Right.
And we'll give honest, direct feedback. We'd much rather somebody pass on a deal than take one on and end up losing money on it.
Yeah.
Because we're in this for the long run. We want to do a lot of deals. Mm-hmm. We want to do a lot of deals. We have a really good track record of repeat clients, and we want to keep that going. So we want everybody to succeed. So we're going to look at that with the right risk lens. So they're going to make their money when it's all done.
I love that. So what should people look at when they're evaluating what hard money lender to use? Is there any factors or questions they should ask or things to look for?
Yeah, that's a great question. We see this happen a lot is clients are extremely focused on points and interest, right?
Exactly.
I mean, I can't tell you how many calls. That's the only thing people care about. And some people ask you points and interest and the call's done in 1 minute because they're just calling around to see who has the lowest points and interest. Mm-hmm. That is probably the worst thing to think about because in the end, when you sign a contract with a lender, you're in bed with that lender from start to finish on that project. And there's a lot more that goes into it, right? So the servicing side, right? Is that lender keeping that servicing in-house or are they selling that off to somebody else that you haven't had a conversation with them?
Right.
Right. Draw requests, super important, right? Mm-hmm. When an investor's out there working on a project and they're ready to request draw reimbursement, what's the process, right? Does the lender have to set up an inspector? 3 days later, the inspector shows up. Another day or 2 later, they have a report that's ready. And then they issue your draw payment. And before you know it, a week's gone by before you're receiving your funds to pay your contractors, right? Contractors want to get paid, right? They want to keep pushing forward. So you got to ask those questions, right? What's that process involved? Do they require you to complete X amount of work before they'll give you your first draw, or do they let you kind of pick the schedule that makes the most sense for your project?
Right.
That's a big one, right? If you have a $50,000 renovation and you can only do it in increments of $25,000, well, you're going to be carrying $25,000 at a minimum of cost for a longer period of time. Whereas if you can break that up in increments, that's going to work out better for you.
Yeah.
So all that's really important. And then who's your point of contact, right? Did you have a sales rep that secured the deal and all of a sudden you're going to this next person and then they're passing the next part up to the next person? That matters a lot. And one of the things that we do a lot of is requesting feedback, right? Hey, what can we do better? What have you seen with prior lenders that you've worked with? What did you like? What did you not like? And the servicing side, time and time again, is what people complain the most when they start talking about past lenders that they worked with. And so we put all of our efforts into improving that process, making that part easier on clients. Because in the end, we want them to get the deal done faster, get it on the market faster so they can make more money.
Yeah, 100%. I think that's a lot of value right there, because I feel like a lot of things people don't think about, especially with the draw request. Like if you don't realize, I have to come up with all this money first and I'm not going to get paid back till a bit later, like that could be a huge shock. They're like, oh shit, I got to figure something out now.
Yeah.
But I love that. So what are any things that we missed? I mean, what are some things that like misconceptions people have about using hard money or things that you see?
Yeah. I kind of hit on that a little bit earlier, but yeah, just that people that use hard money aren't qualified. Mm-hmm. I mean, that to me, that's like the number one biggest misconception, right? We work with qualified clients all the time. We've got people that have 750 credit scores, hundreds of thousands of dollars in the bank, all the time. And so that to me, that's the biggest misconception. And I think another point to kind of hit on, especially, with an audience of a lot of wholesalers, right? Wholesalers don't necessarily always interact directly with the lender, right? In the end, they're kind of in the middle, and a client they're pushing the property to buys it, and that client is actually the one that's using the hard money. One of the things I would encourage all wholesalers is lock arms and build relationships with your local lenders, right? Because in the end, you're in a lot of cases reliant on some type of lender, unless you have cash buyers, to get that deal done, start to finish, right? Nothing's worse than having a deal chalked up on your board, ready to go. You're almost already counting your profits from it. And all of a sudden, the day before the expected closing, an appraisal comes back, and all of a sudden the house they're saying is worth $20,000 less. And then that client doesn't want to come out of pocket that extra money. And then the deal dies, right? So lock arms with a lender that you build a relationship with, that is going to go to bat for you and find a way to get that deal done, right? I think that's super important. There's a lot of back scratching. There's a lot of ways, in this entire circle of this business that people can help each other out. And we do that all the time. We constantly are working with some of the wholesalers in the markets that we're in, getting in front of their clients, educating clients, right? We work with new borrowers all the time, new investors. We're not afraid of that. And so that's just another way is your lender willing to work with new clients, right? If they are, there's a lot more people you can put on your list that you can market to and reach out to.
Yeah, 100%. I think the biggest thing too, like if you don't, everyone's like, how do I find buyers? How do I find buyers? Like, well, who has the buyers? Like, who's already working with them? Like lenders and title companies. Like, that's a big one people miss. Like, if you already have those relationships and they can't have this deal in this area, who do you know? And they know you're someone who operates with integrity. Like, it's a lot easier, like having a referral or someone make that connection for you than just a cold call or send a text to someone like, hey, you're buying properties.
Yeah, absolutely.
But man, so what's the best way for people to connect with you or learn more about what you're doing and Crown Capital as well?
Yeah, so you can go to our website. It's www.crowncapitalresources.com. We've got some information on there. Feel free to reach out to me. It's Jeremy, Jeremy, at crowncapitalresources.com. Reach out. I'm here to help. We educate all the time. We love working with people. So we're here as a resource. You have clients looking for deals in Texas, looking for loans in Texas. Those are our markets. We know them pretty well. So we're here, happy to send out term sheets and look at any opportunity that's out there.
I love it. Well, you definitely make sure you go connect with Jeremy. And thank you so much for coming on, man. I'm happy we were able to do this.
Yeah, appreciate it. Thanks, Kyle.